Hello, everyone. I'm Jean-Claude at Young Mystic. You are watching Beyond the Vault. With me today, of course, is the one and only Andy Scheckman. He's the president and CEO of Miles Franklin Precious Metals. You can find him here at milesfranklin.com and also on his YouTube channel, Little by Little. Andy, welcome back to the show. How are you?
What is going on, JC? It's wonderful to see you, brother.
What's going on, Andy, is triple digit silver. The t-shirts you were selling years ago are finally in full effect. Congratulations to all of you watching the show, holding precious metals over the years with conviction and intestinal fortitude. We are here this morning. We're just dipping down below 100 right now. But Andy, I want to get into all of this with you today and try to understand what the hell is going on behind the scene. Let me read first before we get started. Part of this post here: silver just hit $100 for the first time ever. Well, technically that's not true. We've been over $100 in Shanghai for a couple of weeks, but at least here in the West now, in the COMEX, we had the print earlier this evening or into the morning. If you own silver and you know what this moment means, years of precious patience, years of conviction, years of being told you were wrong, years of being told it was just a pit rock, suppressed for 200 years, 300 plus paper contracts per 1 ounce of silver, and on and on and on. You were destroyed by the mainstream news and by your friends and families, and yet we are here vindicated. And as the post says, it was inevitable. But this is just the beginning. My poster suggests, Andy, that we're in the end game here with the $100 silver and $5,000 gold. But in fact, it's probably more of the beginning of the end. Andy, what's just shifted here in the last couple of weeks since you've been on the show? We were trailing at 95 for quite a bit of time. There was a huge battle there, but suddenly in the last 24 hours here, we've surpassed those numbers, and it appears that the manipulators maybe have thrown in the towel, both on gold here at $5,000 gold and at $100 silver. Andy, what just happened in the background?
It's you can only manipulate a market, JC, over an extended period of time by pushing the direction that it is going. A market in backwardation like this, you try to manipulate it, you're as stupid as a mud wall. Let's talk about your bank up there in Canada. Talk about stupid as a mud wall, TD Bank. And TD Bank is one of the banks that is short fairly significantly. And in years past, the COMEX, the CME group, would do things to protect, the bankers. And for example, in 1980, when the Hunt brothers tried to corner the market, they realized that there were more contracts by a long margin, similar to what we see today. In fact, exactly the same what we see today. Then there were bars in the vault. And so they said, let's stand for delivery. And they bought up all the paper they could get and tried to stand for delivery. And then the exchange changed the rules on them and said, you can only be long a certain amount, but you can be short. Something in my eye, I'm sorry. You can be short unlimited amounts, basically. And so they had to sell those long contracts, and price blew up, or they were in violation of new regulations. In 2011, they raised the margins significantly because it was a market that was more about speculation and leverage. And so when you raise the margin requirement, that being the amount of money that you need to keep in your margin account in order to hedge or to speculate, to buy. In other words, on Christmas Day, well, when they did that, they raised it about 5-6 times and the market collapsed. Christmas Day this time, they raised margins by 30% the day after Christmas. So let's say you need $21,000 in your margin account Christmas Day to control a 5,000 ounce silver contract. At the time, $60, 300,000, 21,000 controls 300. Well, the day after that, and a lot of these traders would speculate and buy, they have 500,000 in their margin account and buy multiple contracts and leverage it up and try and, capitalize on this silver run. And then the day after Christmas, they raise on the 26th of all days, they raise margin by 30%. You need to now have 27,000 in your account, or we're going to by day's end, or you're going to get a margin call. We'll unwind your position. So people had to sell. And the more they would do this, the more people who were on leverage would sell. Selling begets selling, begets selling, begets selling, and it crashes. Well, they did hit it, but guess what happened? it just fired right back up. Why? Let's talk about December. This happened in December, the December delivery month for silver, which was the largest delivery month in the history for December, the largest December delivery in the history of the COMEX market. It's been around since 1974, 68 million ounces of silver. Now, let me ask you guys a question. If a mint box of Eagles or Maple Leafs is 500 ounces and weighs 42 pounds, who just took possession in December of 68 million ounces? And that's a delivery onto COMEX, much of which leaves, some of which stays in the eligible category, meaning it's not for sale, because there's, the COMEX vaulting system. One of our 8 vaults for our Brinks program is in JFK, New York. It is a COMEX vault. All of my clients who store 1,000-ounce bars there, if that's what they store, they're eligible, meaning they could be sold, but they're not for sale. That's registered. Anyways, the moral of the story is 68 million ounces. And then so far this month, it's at least 40 million ounces that have stood for delivery. And it's not even a delivery month. In both months, 5-6 million ounces of gold. Every single month for the past 15 months, we've seen this. And, zero journalistic integrity anywhere. There's not a damn media outlet or Jim Cramer, the moron who would come on here and on his show and say, I got to tell you, it's really strange, folks, who is standing for delivery for hundreds of billions of dollars worth of gold and silver. Every single month, we're seeing billions upon billions upon billions upon spill. Let me get back to TD in a second, but that's all you need to know, right? Because the people at that level, they don't fuck around. Yeah. People who are spending billions and billions and billions of dollars do not fuck around, do they? They know what that money is going for. They are told, here's what's going to happen, deploy the capital. At that level, that's all you need to know. Now, let me talk about TD.
Hold on to that for just a second for TD. I want to get back into it. But what you're explaining now in terms of these huge deliveries on non-delivery months too, I want you to explain to the audience what's happening. Typically, we see people with these contracts roll forward their contracts every month and never stand for delivery. What we're seeing now is not only are they standing delivery on the current month, they're rolling backward the March and April contracts into January and now into February. Why is that? What's happening in the background? Explain that to the audience, Andy.
Well, they're just, look, right now, and the market is in what's called backwardation. And what backwardation means is it's not normal, especially for something like silver, which is very heavy, because a normal market condition is called contango. Contango means today is the spot price, which is less than the futures price. Why? Because the futures price takes into account the cost of storage, the cost of interest, the cost of money. And so when you buy something out into the future, there is a way that they can, you pay more and more and more the further out you go because of the cost of interest and storage and money. But if, right now it's backwardation, where it says, JC, I'd love to trust you for another month, but I'm going to pay more to have it delivered right now. Thank you very much, because I want it now. And I don't want it in the future. And so what it basically says, it's very people want it now, and they don't trust the future, which is unusual. And most of my career, I've been doing this since 1989. I'm kind of the gray hair in this industry. I've been doing it longer than anybody, just about. And less than 1% of contracts ever stood for delivery. No one stands for delivery. The COMEX exchange was used or originally designed not to be a delivery mechanism, but to hedge risk. A miner who is mining gold or silver can sell his production months in advance to the refinery or to the end user who wants it. They're happy with the price. They're happy with the price. It removes risk. A farmer planting a field of wheat in the spring, the baker who buys it for delivery in the fall, wheat, because they need it. And so they find prices. Or me, I have metal in my warehouse. Let's say I have 3 million ounces of silver in my warehouse and the price falls by $10. That's $30 million. I might as well just lock up the doors and say goodbye. So I hedge the other side. I sell short on COMEX. It goes up as the other one goes down commensurate. It is used to offset risk. It has turned into a delivery mechanism. It has never done that, where now you see wicked amounts being delivered. It's
So
4 feet of snow in Death Valley in July. And if that happened, no one's going out to build or to open up a snowmobile dealership in Death Valley. It's an anomaly. And yet nobody, I'm screaming about it every month. No one in the mainstream is talking about it. I just want to hammer this home for one last second. And remember your point.
Yeah.
If the biggest, most well-funded, well-informed money in the world is doing this, that's all you need to know. That's all you need to know.
Yeah.
They don't do this for the hell of it, and they're spending billions and billions and billions and billions and billions. I would say that you need to know nothing else.
Well, now we're seeing
I'll tell you about TD Bank.
We're seeing what you're saying now in the open, but you've been saying this for years, and commensurately also at the Beyond Mystic conference last year, you were in your keynote address expressing that a lot of people were in fact front running this trade and accumulating gold and silver in a rapid clip, historically rapid clip, and yet again at that point no media was talking about it. Now we're seeing it, a deluge of it, and we're seeing the price action reflect that finally. So we're
well, and you want to know something interesting? People
Yeah.
start to listen to me now.
Yeah.
You know, when I was saying this stuff on your show years ago, you know, yeah, your people would listen, but most people, you know, there's a whole school of investment ideology called wave theory, Kondratiev and Elliott wave, that is the herd and the emotions that they have, the fear, the FOMO, the exuberation, the panic, you know, and we're not there yet. We're not really even beginning to be there, but it is people are waking up and they're noticing it. But ask yourself this question: how is it that, and I'm still going to get back to TD Bank, but how is it that in the midst of the greatest tech boom in history, AI, right? Maybe next to the advent of the internet, and the S&P is only up 19%, and silver was up 150, and gold was up 75. And talk about it on the mainstream. You don't want anyone to know about this, right? No, and then at the same time, you see the most well-informed, well-funded money in the world, starting with the central banks in 2020, well, 2017, 18, 19, 20, and on. I screamed it on your show since day one. Central banks are buying it and repatriating it. Buy it and repatriate. I'd say the same shit on your show every time because it's all that matters. Yep. When you see the most well-funded and well-informed traders, starting with the central banks and now progressing to whoever the hell is doing it on the most sophisticated platform in the world, the COMEX in New York, what more do you need to know? Don't listen to the rhetoric. Don't listen to the so-called experts. The people who make the rules and pull the strings and are friends with said people, they are showing you what they're doing, but no one's talking about it. You got to dig or listen to a fool like me.
Yeah, that's why we have the Beyond the Vault series.
Right.
All right, Andy, let's get back to TD in just a second.
All right, so TD Bank.
Well, hold on. Let me set this up a little bit here because there is a lot of fear, uncertainty, doubt, a lot of confusion, a lot of misinformation, disinformation happening in the background. You and I talked about this character last time you were on the show, providing a lot of good info, but in some cases, completely, absolutely ass-backwards info, including the one where just a week ago he said that Trump had signed an executive order placing a price on silver at $600 silver. That is neither here nor there right now, but Trump did sign a proclamation on precious metals, creating a floor, so to speak, here in terms of strategic supply chain management. We'll get into that in just a moment. But in some of his videos, he was also talking about some of the background difficulties that TD was having, that UBS was having, in HSBC. So set up this TD Bank here in Canada. What's going on with them, Andy?
Yeah, and I'll tell you, I mean, there's so many of them now, you don't know which one is real or not.
Right.
Some of the stuff he says, if it happens, is way out of control. I'll explain what you said about those other banks.
Yeah.
Because if it's right what he's saying, the only thing I don't love, I mean, a lot of what he says is pretty profound, and I agree with it. Some of the things he said I don't agree with, like Form 8300 for all transactions. That's only if you pay with green cash. I mean, he got some stuff wrong, but a lot of it's interesting. I don't take exception. I love to listen and pull out what I think is relevant.
Oh,
I have to
listen.
Right.
You have to listen, and you have to take the good and try to weed out the bad. Exactly.
Yes, and everyone, including myself, makes mistakes. I'll tell you, I made a mistake on Adam Taggart. I came back on a show and told I cited the wrong bill, I thought I was talking about the Genius Act and I was talking about the Bitcoin Strategic Act. But anyways, that's neither here nor there.
Yep.
The point is with TD Bank. TD Bank, the way that these banks have done things is use rhetoric and naked shorting. And again, if you short like TD did here, and I'll explain in a moment, into a market in backwardation, you are as stupid as a mud wall, right? Because meaning you're going to sell short, so you're going to sell into a market where they're paying more money for immediate delivery than out in the future. Real smart. So anyways, but this would work, right? And they would dump it at weird times and do all of these things. So I'm going to read you what TD said to their people, whoever their people are. It said, we enter spot silver. We enter short spot silver, anticipating. So they sold short, meaning they sell, drive down the price. They get money back for that short sale, and you have to buy it back at some point in the future, right? So you think if you short sell, you sell, even if you don't own it, it's a naked short, drives down the price. By the way, that naked short is part of the great taking. Where do the shares come from? You borrow it from the DTCC. And if, that's another story. But for those of you who haven't read or listened to David Rogers' Web, The Great Taking, do it yesterday. Anyway, so they sell short. It says, so and you get money and you have to buy it back in the future, right? You anticipate at a lower price if you're TD Bank. So we enter short spot silver, anticipating a dramatic reversal in prices as silver's devilish, right? Let's frame it negatively. Oh, yeah. Devilish blow off top comes to completion. They entered a short position in silver futures in early January this year, betting the price would fall towards $40 an ounce. They placed a stop loss around $92 to limit losses if the price went the other way. And guess what happened? Last Friday, they were stopped out at a massive loss and they had to pay for it. So this is showing my point that these tricks don't work anymore. Why? Why doesn't raising the margins work anymore? So I had lunch the other day with the owner of a pro baseball team who lives not too far from me. I do business with his family. And he invited me over for lunch and to talk. We ended up talking baseball cards and baseball the whole time. I didn't even bring up gold. And his neighbor is Mark Wahlberg, the actor, and down the street is Alicia Keys. Now, these houses, I've never seen anything like it in my life, ever. Do you think they care what mortgage rates are in that neighborhood? I don't think they care. They come in and pay cash, right? They don't care if the mortgage rates go up. Now, that may be different in my neighborhood, but the point of it is what I'm saying. The people standing for delivery do not care what the margin rates are. They're not buying this stuff on margin. They're coming in and paying cash. And what they do is they know that these traders who go in on margin, they may have, they might be rich according to you and I, but they're not central bank rich. They're not Tesla rich. They're not Samsung rich. They're not sovereign wealth fund rich. So they're
not the Pentagon rich or the Department of
Defense. Let's shake the bushes and all these people fall down. And normally that would break the back like it did in 2011. It took 15 years to come back. No, not this time. Thank you very much. Thank you very much. Record delivery month, and we will take it at a subsidized cost. And that was the day after Christmas. And it's gone up over $30 since then. So yes, where are we? We're in a repricing event with silver, a repricing event where I could argue that because of the suppression by 8 Western banks, and that gets into what you were talking about, where the Economic Times, and this is not Asian guy, came out and said that the five U.S. banks who have been in collusion with the other 3 or 4, 1 or 2 in Canada, 2 or 3 in Europe, the 5 U.S. banks have flip-flopped. And they have now gone long, exposing TD, exposing the European banks that JP Morgan has covered a 200 million ounce short position, bought millions of ounces of physical, and they, along with the other 4 banks, are in essence net long. The Commitment of Traders report at the end of the year did prove that to be true. My point is, there's someone left holding the bag. Now, this supports Tom Luongo's theory that Trump is out to get the European aristocrats, that he believes, as he mentioned in his speech in Davos, that the election was rigged in 2020. He said that just the other day. And Tom Luongo believes, he thinks it is the European aristocrats, the ones behind the old money, the big banks. They did it. Well, how do you do it? You tell everyone it's tariffs, all this gold reshores. It's not tariffs. And I'll explain the mechanism in a moment if you'd like. But now The banks have covered their shorts, but all this metal coming in, and who do you think is going to end up with it? My guess is the Treasury Department, who orchestrated all this with the banks. Cover your damn shorts. Bring it back. We're going to tell them it's tariffs. You'll tell them it's coming back, but it's not. You're reshoring it. You're covering your positions. You're going to sell that to the Treasury. They are going to be exposed, and the price is going to go parabolic. And watch what happens to the Bank of England, to all of the European banks, such as Deutsche Bank, UBS, Standard Chartered. One of them is in, I don't know, 2 of them, 3 of them, all of them systemically connected to what is actually an existential threat to them if prices continue to move this way. But especially if what Asian guy says is true about JP Morgan and Morgan Stanley, in which both cases he said, in essence, that they were told, and I hate the leaked memo part. I don't like that part. Like, show me something, brother.
I know. Me
leaked
too.
memo says, that they were, both of their desks were told to completely exit all futures positions by the end of this month. Why? Because if indeed the shit hits the fan, the systemic nature pulls everyone down, be out. So it doesn't speak to their bullishness. It speaks to those that are holding the bag have fallen into the trap and get the hell out by the end of the month. If that happens, I'll listen to everything the dude says from here to eternity, because he's connected at a level that none of us are.
Well, here's the thing. You and I were debating on this a couple of weeks ago, and we had Cliff White chime in also on this behind the scenes, suggesting that perhaps this Asian guy was in fact the same people who are responsible for Q. So this is a whole big operation. As you and I were discussing, it's impossible for this guy to be putting out that many videos a day if it was just one person. So there's a huge intelligence community behind these videos, and they certainly have access to comms and to secret memos. Some of that has come out to be true. Some of it has not yet been proven to be true, but it's possible that some of these comms they're putting out is actually that right now, a strategy of war to destabilize the banks that Tom Luongo is talking about in his proposed strategy, and why perhaps the Trump administration here is playing this game with the Treasury, the Pentagon, and the Department of Defense. As you and I talked about last month, those 3 entities put together, financed also by JP Morgan, are investing $7.4 billion in the United States for a refinery. Trump did sign the proclamation here on precious metals, creating a floor also here as well, suggesting that perhaps the times have changed, because in the past, Andy, we had a de facto ceiling in the precious metals community, to where when the price rose too quickly, we had these banks shorting into the market, effectively creating this ceiling. Now, if we're looking at these 5 banks who, as you just said, flipped and are going long, they've put the floor underneath, and the President Trump seems to be adding fuel to the fire here. So we're not there yet on this executive order, but speak about this proclamation and what it really means in terms of creating a floor, and what it means for the price here moving forward. We are now, as we're recording here today, at $100 silver, triple-digit silver. And you talked about the Elliott wave theory earlier, but some Fibonacci analysts were looking at this last week, and they're like, based on the current models, they're looking at $612 silver. That's very close to the Cliff High number of $600 silver that's been in the data for some time now. And now we're seeing that manifest in some of our mainstream news. So something big is happening. What's this move by Trump here, and how does that tie in perhaps with Venezuela and also Greenland and this Golden Dome initiative, Andy?
Yeah, everything's gold with Trump. You ever notice that? Instead of the Iron Dome, it's always a gold, He who has the gold makes the rules, the Golden Dome. I mean, he gives you signals if you listen.
Oh, yeah.
What this really means, it's not done to make their stash bigger. Look, they held it down. See, this is part of understanding how the trap has been set. The West has held down silver. 8 banks. Ask yourself this question. Why 8 Western banks? West being Canada, US, and the EU. And no, it's not too late. It isn't. No. I agree. But why would 8 banks hold the largest concentrated short position, Jean-Claude, in any commodity of the roughly 1,000 traded on COMEX? Why would 8 banks in the West hold the largest concentrated short position of any commodity ever traded in the history of the exchange? Why? That's, again, make it simple, right? Don't get lost in the bullshit and the minutia. Why would 8 banks in the West hold the largest concentrated short position in one little itty bitty commodity if it's no big deal, right? It was because the military industrial complex, which needs wicked amounts of silver to make high-tech weapons, ruled the world. This is who made the weapons to protect the West through NATO. This is who made the weapons to make the West strong, not just the U.S., Great Britain, France, Germany, all these countries. They had a vested interest in stepping on the price of gold and silver. Gold, because of something called Gibson's paradox. If you maintain low interest rates in the West after you've offshored your manufacturing to Asia and you maintain low interest rates to make all of the constituents feel wealthy, how? Through low interest rates. Your house goes up. Your 401k goes up. I can have low interest rate on my house that I bought a long time ago. The price has gone up, so I can refinance it and buy 3 wave runners, take a trip to Tahiti and a new car and pay less than I did the year before. It was an ATM.
Yeah.
That's what happens when you suppress interest rates. You create all these distortions in asset prices, and people do things they wouldn't otherwise do.
Perceived wealth effect.
Yes. So in doing so, they had to step on gold, which pays no interest. It's the canary in the mine shaft. Gibson's paradox says real interest rates and gold move inverse. If the world was strong and stable and the U.S. was strong and you got paid 10% interest rates on treasuries, the rule of 70 seconds says in 7.2 years into 72, you divide into 72, tells you how long your interest before your principal doubles. That's the law of 70 seconds. In 7.2 years, your money would double in treasuries. Why would you ever buy gold is what the theory would say. At 0% federal funds rate, that's opposite. So anyways, that's why they held it down, and they held it down to rule the world, right? And no one ever stood for delivery. Most of our lives as kids, these other countries were third world, like India, like China. They weren't what they are now. They're industrialized, they're smart, they're coordinated, they're motivated, they're wealthy. And we stand for delivery. That's how it goes. So everyone says, why don't they just do it all at once? Because that's as stupid as a mud wall also. You cut off your nose to spite your face. Boom, the whole thing blows up, you're done. But how about we cut them with a piece of paper 4 million times, and slowly over time we drain the exchanges and we play their own game. We use the Western suppression to pickpocket the world's commodities. And that's exactly what they are doing right now. So, when you talk about a floor, the reason that they have implemented a floor is not to make the price go higher. It's to incentivize what has been slaughtered, and that is domestic mining.
Right.
If silver in particular is found near your skin is epidermis, silver is found epithermal, right at the top. The big deposits were found forever ago. And so, you look at of the primary silver mining companies, there's not that many of them. And of those, they only are responsible for mining 18% of the silver that came to market last year. Of the 850 million ounces, they did 18%. The rest of it, most of it, comes from byproduct mining of copper, lead, or zinc. Those companies that mine copper, lead, and zinc do not have an incentive to start digging for silver. They're not looking for it. They stumble across it. Where you find these things, you'll find some silver. So anyways, it's to incentivize the miners here to start digging the fucking holes, because if not, if the all-in cost is $40, well, if that's what it's costing to pull it out of the ground in less economic means, because the low-lying fruit's been picked a long time ago, well, you got to keep a floor under it so that the people who are mining it can mine it and make a profit, right? And so
we're seeing an institutional shift here from the White House. We're seeing basically a policy change here to incentivize production, and we have
somebody got to him, Jean-Claude.
Yeah.
Thank God for that, because since November of last year, before he even took office, we are, and this is what I've been screaming on every podcast, who is bringing in billions and billions and billions and billions and billions and billions and billions of gold and silver every single month since last November, a year ago?
Yeah. Who's storing that? Where?
That's all you need to know, you guys. Please believe me this. At that level, they don't fuck around. And I'm sorry for using profanity, but I want it to sink in. Because a lot of the stuff I've said on your show, look, I've been right on almost everything I've said, and I'm not a genius. I'm not a soothsayer. The only thing that I think I do really well is I like to connect the dots. Maybe I can, maybe that's why I am so connected to your channel, which is about, and what you talk about, which is not just being black and white. It's letting your mind expand and seeing things in a bigger picture. And believing in things that are bigger than ourselves, and seeing things and trusting your intuition. Yeah, that. Oh my God, you see that path? When I started talking about the bricks with you, no one was talking about it. Now everyone talks about it, but it was easy for me to see if you just open your eyes.
Yeah.
And I think this is easy to see too.
Yeah.
The biggest, most well-funded, well-informed money in the world are prioritizing physical demand across the globe. Let's talk about what they're doing in Asia right now.
Hold that thought for a second here. I have a few more things, and I know that we have a hard exit. I want to make sure I hit all my notes first.
Yeah,
so first of all, be saying, hey, we can listen to Andy all day long. Thank you for that. And try to crutch also is saying inside scoop. Yeah, thank you, Andy. I appreciate all of that work. Guys, if you want to hear more of that inside scoop, of course, with Andy, please go and subscribe here to Miles Franklin Media. You can find them on YouTube. Andy and Michelle McCory here are doing a fantastic job over the last couple of months on this channel. It's growing rapidly. And if you want to have more, he's just surpassed me in view counts, by the way, and subscriber counts. Congratulations, Andy. If you want more of this wisdom, guys, go check it out.
Well, I didn't have to restart my channel 6 times like you did. So
right.
let's call a spade a spade. You're a little, you got screwed there.
Yeah. And I tend to get into difficult subjects that YouTube doesn't like. But
one thing I want to say real quick before you flip off this page, if any of you bought IRA precious metals, not from me, and you bought from any of the companies that are promoted on, Christian or right-wing channels or media, you bought things like quarter-ounce gold at a high premium that they told you were special, or I talked about this at your conference. I did an interview on this channel with a man named Dale Whitaker. If any of this,
I saw the video. Let me see if I can bring it up. Yeah.
Listen to it if this happened to you, and then call us if you need help or want to talk about it.
Yeah, you were describing. So I think it's this one here.
The dude is a whistleblower.
This video here, Andy?
It blew my mind, man.
This one here.
That one, yes.
Let me bring the link
and
down. Just
listen to it.
I'll just bring the link down for the audience here so they can go and watch it. So let me just add that to the feed.
I've done it the right way. I've never mentioned the names of the companies. I try to be professional. I'd like to debate their owners, but they're all chicken shit and would never even think of it.
Right. The point is there's unscrupulous dealers.
There is.
And some of our audience members made the right decision in terms of trying to protect their wealth and not listen to mainstream news, but maybe made it wrong decision in terms of who they were working with. And you can correct that, is what Andy is saying. So if you need help with that, just contact Andy and go watch that episode. I just put it in the live chat for you guys now. Let's talk about price here for just a moment, Andy. 2 weeks ago, the U.S. Mint suspended sales of numismatic coins. And what they said on their website was that there was so much price volatility that they couldn't adjust the price. That's what we were told. And then suddenly they put the website back up and they almost doubled the price. Here, of course, we're looking at the proof coins and the uncirculated coins. There's a distinction there made for the audience, but nevertheless, at that point, spot price was $91, and suddenly these proof coins were selling for $173. What were they portending here with this change, and how fast can this devolve into the spot price here in the West, Andy? There's been this dislocation right now for the last month and a half between Shanghai Gold Exchange prices over there versus what we're seeing on the COMEX. Nobody's filling the arbitrage gap, so something is broken in that mechanism. But yet the dealers, and in this case here, the primaries, the U.S. Mint, are changing prices significantly here for the reality of what they see on the floor on a day-to-day basis in terms of being able to replenish their stock to sell more. This is why these prices here are so big in terms of fluctuations. What happened here specifically with the numismatics, and what does that mean moving forward, Andy, as we are in the beginning of the end game here for gold and silver?
I don't know why I can't get this damn tube open. These are the ones that are commercial strike. These are the ones that you can't buy on the website. These are the ones that we would sell, that they would send to us. These come in boxes of 25 of these, 22 coins to a tube. Those have never done what those do. The proof coins and the companies that tell you to buy proof coins, they suck. But the companies, the proof coins themselves are pretty cool. I usually I have 3 kids, I buy 3 a year and I put them away. And the difference between a proof coin and this coin is they'll take these coins, this is a regular silver eagle, they'll stamp it once, put it in these tubes, put it in a box of 500, and send it out to dealers like me. You can't buy them on the website. The proof coin, they take this same piece of silver, we'll call it a planchet, and they'll polish it under industrial buffer, stamp it 4 times. In that buffer, you can almost see a reflection in it. Stamp it 4 times for greater definition, put it in a velvet box and sell it, in this case, for 1.5 times its price. The uncirculated coin is similar to the proof coin in that it comes in a box, except it's more like the commercial strike coin, but it does have a little bit of, I mean, it's more of a collector piece that why the hell would you buy it, right? I mean, anyways, those things are different than the commercial strike. And that goes to show the misinformation that's on the internet. Everyone was saying Silver Eagles just got repriced. No, they didn't. It's just the stuff that the mint sells directly to the public, but you can't get these directly from the mint, only the collector stuff, which is, would be no way to build a portfolio. You make it simple. Hot fudge sundae. This is the vanilla ice cream. Those proof coins, that's the, if you like modern stuff, see, I'd rather buy the old stuff if I'm going to buy anything collectible. But anyways,
well, thank you for the clarification, because a lot of people were confused about that. They saw, again, some Asian guy video suggesting, hey, that spot price was 173. That was not the case. We're talking about a very different process here. Nonetheless, it was interesting at that point during the week at $91 spot on COMEX that the mint would just suspend sales altogether. This is also suggesting that there might be a supply shock happening in the background. Let me go back, though, to what I was talking in terms of arbitrage opportunity, and why perhaps the gap is not being filled. This is a couple of days ago here. Silver was exploding at 109 in Shanghai. I think we did hit 113 last night. But yet this arbitrage opportunity has not been filled. The gap has not been filled now for weeks. This typically does not happen in a normal market, Andy. What's going on? Why are the traders not
You're not just a pretty face, Jean-Claude. You're not just a handsome guy, because you are right. What he just said, everyone, is factually correct. Arbitrage is typically filled quickly. Arbitrage means you can buy it here and sell it there at a difference. So I can buy it at point A for X and sell it in point B for X plus something. Normally when you have arbitrage, when you have that opportunity, the sophisticated traders would say, shit, buy it all and sell it over there. Yep. And boom, well, the whole thing, the market, this is what free market enterprise is. The free market would correct that very quickly. And, those who are smart enough to catch it would catch it. And then all of a sudden it would change. So in this case, why hasn't it changed? Let's think about that. Do you think the Chinese say, we're sitting on all these dollars and screw it. We'll pay extra. I just got it open finally. God's sakes. We'll pay extra for this, right? We'll pay extra for that. So let's do it this way. Let's keep a consistent $12 premium in Shanghai. So you get the trader who buys the paper in New York and sells it over here in 10 million ounces at a $12 a piece deal. You just made 120 million. Woo-hoo! And off you go. But that silver's never coming back. Never. And so they're smart enough to say, these dummies, if we just entice the big traders, they'll buy in the West, deliver physical. And how do they do it? A lot of people don't know this, but there is a COMEX contract where you can what's called exchange for physical and deliver it in Hong Kong. How do you like that? There is a Hong Kong Brinks receives the metal. And then guess what pulls up to it? A truck that drives it to the Shanghai exchange. So you can buy it in paper, deliver it in physical over here, and that get a big payday, but it ain't ever coming back. That is why they're doing it. And that's why it's not taking care of itself, because someone who has enough pricing power says, just leave it. It's okay. We'll take as much as they'll give us. And that's what they're doing.
Right. Now, you mentioned something earlier about Trump and the tariffs. Is it possible that this arbitrage is not taking place also where banks used to sell in New York to move it to London if London was short and then bring it back in? Now they're facing tariffs if they're bringing back in. So that mechanism of playing these paper games here in the background could have been broken with these new tariffs. Do you agree with that? And what can you add for the audience?
Yeah, so this is how they would suppress the price. This is the whole game, right? How did they do it? How were these banks in collusion together? And they were since the London gold pool, for a long time. So here's how the mechanism works. They will sell short in New York. This is where the price is set. That drives down the price. So you sell this, drop it onto the market. Now you're short in New York, the price drops. You then take this and you go long a corresponding spot contract in London, which doesn't affect the price. Your book is neutral now, but the act of doing this repetitively drives down the price in New York, drives down the paper price, but you're net long over there. And so either by warrant, which is just a piece of paper going back and forth, or moving it in a vault. So like in a JP Morgan vault, they would move it from point A to point B. Didn't even always have to go back and forth. Sometimes it did. That's where it's called exchange for physical, where you could take an LBMA contract in London and buy physical in New York, or take a COMEX contract and buy a physical, exchange it for physical in London. This would go back and forth, but this is how they would cap the price, make it look like all this volume, but they're trading amongst one another. It's like me and you and Cliff and Bix, we're setting the price. We just trade back and forth between each other forever. But every time we sell it over here, it drives down the price. We go long over there. We play this game and net very little gain, which is what they wanted with gold and silver. Now, I think someone got to Trump. And if I had to guess, I'm going to play this out completely, this is in the woo. I see this as how it went down in my head. Okay. Trump gets all the bankers together. You dumb son of a bitches. Do you see what you've done? Here's what you're going to do. I'm going to tell everyone it's tariffs. And you're going to talk to your buddies over there in Europe who you've colluded with forever. And you're going to say, listen, guys, it's just a one-way deal. We need to cover these positions right now because there's all sorts of focus on it. Don't worry, the metal will come back. We've been playing this game forever. We're buddies, right? All the metal comes back. Who's been bringing in billions and billions and billions and billions and billions and billions every month? Thanks, guys. We're covered. What does Trump say? No, it's not tariffs. They're reshoring. I've been screaming that. They're reshoring. They're screwing the banks. And why would they do it? This is Tom Luongo's theory that Trump believes that the European banks were, or the people behind it, were involved in the color revolution and the election interference to keep him out of office.
Yep.
And so how do you get them? You cover these positions. Totally. Now, if you get a bank failure or a failure to deliver, for people who don't think this can happen, how many times have I told everyone to watch Chris Marcus, Bart Chilton podcast Chris on Arcadia Economics interviewed Bart Chilton, the head of the CFTC, who admitted this shit happens, and that's why Bear Stearns went bankrupt.
Yep.
And so if one of these banks fails,
what was the number? Was it 500 to 1 or 600 to 1?
On LBMA?
Yeah. What was it?
In London, there's 2 billion ounces of spot contracts.
Yeah.
And David Jensen, those contracts are out there. People can stand for delivery, 2 billion ounces. Yeah. And he will tell you that there is a disputed, but yet they quote 140 million ounce float. So whatever 140 million is into 2 billion. In other words, they say they have 140 million ounces, but there's 2 billion ounces in spot contracts that could redeem for delivery. What could go wrong? And it's probably more than that. I'm sure there's leverage upon leverage upon leverage. But here's the deal. My guess is Trump said, not only are you going to cover your shit, you're going to sell that to the U.S. Treasury, because now silver is a critical mineral. And what did Judy Shelton say on my channel? I'm going to peg the back end of the bond market to gold. And that is my thesis with the Genius Act to suppress the front end. Right. What are companies like Tether, who you can't transfer that interest on the Genius Act moving stable coins? What are they doing? They're buying gold, which pushes the price of gold up, devalues the dollar. I mean, I can go into that whole thesis again. It'll take 5 minutes. But I swear, I think that's what's happening.
We can come back to that, and people, of course, can go watch your presentation at the conference. It's still available on the Academy page. This could lead into what people are asking here: is Trump preparing to acquire a strategic silver stockpile? I think he already has. This is part of the theory here, and the answer to the question: who is taking possession of all of these ounces of silver here in the last couple of months? Andy, we're at 43 minutes. I think we have 5 left before you have to go. You're taking a plane here later. I wanted to get into some of the predictions. And again, any other time in our history of you doing shows with me in the last 5 years would have been considered complete nonsense, pie in the sky, tinfoil hat, conspiracy theory level. But yet here we have James Turk suggesting now that gold's fair value is $11,000 and silver's fair value is $567 per ounce. And if you look at some of the older predictions that Jim Sinclair had put out in terms of the price of gold, doing the same calculations today, looking at the money supply.
Okay. And now I got to tell you something cool.
Okay, let's get
184,000, he says. Now so he was my friend, God rest his soul.
Yeah.
And I used to hang with Jim.
Yeah.
That's wicked, because you got to hear this. I didn't realize that that was his number. This is crazy. So you want to talk weird? This is
Yeah.
weird. There is a company called Van Eck. Have you heard of Van Eck?
No.
Van Eck is a mutual fund company.
Okay. In the United
And
States? In the United States?
maybe you can Google it and see where Van Eck is.
Okay.
And I gotta find. God darn it! What did I just do with? Let me just search for it. It's really crazy that he just said that. Oh, darn it! Darn it! I gotta find my Van Eck thing, because this is gonna blow your mind.
So they have.
Here it is, right here.
Yeah.
What does it say?
It's worldwide. They have subsidiaries around the world. Keep going.
All right, so check this out. So I've been saying forever, right, on your show, that what's going to happen is that my theory is that Trump, through a million reasons, wants to lose the reserve status.
Yeah.
And you look at what's happening with now the M bridge. We talked about the BRICS. That's operational now. They're trading the unit right now. They're trading it, and the SIPs, cross-border payment. What the hell is the name of it? Cross-border payment system. I forgot what the acronym stands for, with China. And they're all trading local currencies and settling imbalances in gold. All of them. That's the premise of all of this. Instead of using the dollar, they use their own currency. Instead of using treasuries, they're using gold. So Van Eck comes out, and this is they're not emotional about anything. It says, what if gold replaces the US dollar as the reserve standard? And I believe you will see everyone using their own local currencies, more of a mercantile type of environment instead of a globalist. And that's exactly what Howard Lutnick said, that globalism's dead. We're going back to mercantilism. Exactly. He just said that in Davos. Okay. Yeah. What if this happens? It says, in this paper, our emerging markets bond team values gold matching central bank money liabilities. This is fucking crazy. He says, implying either a $39,000 to $184,000 price. Mm-hmm. To Jim Sinclair's number, it says central bank M2 money liabilities divided by gold reserves equals 184,000 per ounce, weighted by daily FX turnover. Using global M2, we calculate that the total global price of gold that equalizes M2 is around $100,000 per ounce, weighted by daily FX turnover. That gold price equalizes M2 at $184,211. And Jim Sinclair says 180. I mean, that's just like spooky as hell.
Well, again, Jim was the guy who predicted the $800 goal at the time. People laughed at him, and I think he was off by only $34 or something. It went to 834, based on doing the same type of math and calculations that I remember when you and Bill Holter was on the show talking about that math. They're saying, well, it's not there, it's not pie in the sky. It's not the rocket science. Here's the number. It's really easy to do. And so, man,
hang on. Can I say one thing?
Sure.
To Dior Media? I would love to have a conversation with him and tell him and easily change his mind as why BRICS will do a whole hell of a lot more than piss into the wind. And it has nothing to do with trusting Putin and China. It's a trustless system. A system that will be built upon gold that is and central bank currencies where gold is redeemable using those currencies. It is not relying upon one hegemony. All of these countries will have equal weight and equal say. And I think BRICS is a whole hell of a lot more than people think, a lot more, because the more, and they just signed up the countries in Southeast Asia, the Asian countries that represent 30% of China's trading. They're now connected to a system that allows them to no longer settle in dollars. And if you have all of these dollars, you have to keep your reserves in treasuries. So if you don't have to have all these dollars, that's why everyone is de-dollarizing and selling treasuries. You trade in your local currency, you settle imbalances in gold. And what are they doing? They're building vaults all around the Belt Road Initiative. The first one was Hong Kong. Why is that significant? Because when you redeem gold out of China, it has to go through Hong Kong. So anyone who has digital yuan, bang, give me the gold instead. The next one is being built in Saudi Arabia. Do you see that as being a problem? Saudi Arabia, who is a fifth primary developer of Mbridge. Do you see that as being a problem? So when people say BRICS won't do anything but piss in the wind, it's very naive, with all due respect, because even if they don't really replace anything with the dollar, all of this settlement that used to go in dollars, all of the reserves when you have to hold dollars would go into treasuries, buy, and all of a sudden everything begins to change. And when you
that's
bring
the
the
escape
Asian,
velocity. That's the escape velocity. Jim Willie and I were talking on the
yes,
show, and you know, we're talking about years ago. We're almost there. So that's what you mean. Yeah.
and they say the problem is an audit of gold, but it isn't a problem because it will all be via a blockchain and deliverable.
That's the thing.
And that's the thing. It's deliverable. And
I
so
don't trust China.
who trusts the United States anymore? And that's
the
just the
thing.
bottom line. You know?
trust gold. I trust gold, though. Yeah,
right.
Exactly.
Anyway, I don't mean to, I love talking to you. It's been too long. These are, as the Chinese curse says, interesting times.
Yeah.
They are interesting times.
Andy, before you go, you've just dropped the special here on junk silver for the Beyond Mystic audience.
99 cents.
Guys, if you want some silver here, check it out, beyondmystic.net/silver. Just fill out the form here, click on the link, and get some silver to you today. Last 2 minutes here, you just mentioned Treasury bonds and how people are de-dollarizing that right now. What's happening in Japan very quickly, Andy, and why could that be the tsunami that Jim Sinclair was talking about years ago that would start in the East and then hit our shores? Are we almost here? What's happening right now with the Japanese government bonds?
See that me and Dior can have a nice conversation. He says, thank you, brother. And that's how people learn. This country of ours has gotten so divided. People can't.
And by the way, that's what this channel is all about too.
Yeah, man. Absolutely. No, I like that. Yeah. That's what my wife says when we're going into Thanksgiving dinner. We'll say a fucking word when we go in there. Not a word. I want to stay through dessert. Okay, fine. I won't. Japan.
No, we want you to speak, and we want audience to say their mind as well, and that's how we grow. And
that's right. If you never listen to other people's opinions, you learn more and more about less and less till you're an expert on nothing. And the thing of it is this. Japan has been the piggy bank of the world for a long time. Why? They kept their interest rates at zero. So you could borrow yen at zero, convert it into any other currency, dollar or euro, let's say dollar, and you could buy NVIDIA, you could buy Apple, you could buy 10-year treasuries, you could buy all this stuff paying a higher yield because you're borrowing at zero. And they were keeping their yen suppressed and all that. So now you convert back in and you make that spread, and all of this money, $1 trillion in Japanese pension funds, all of it pouring into the U.S. and to other places to prime up values. And even the people in the U.S., they would borrow in yen, convert it to dollars, buy shit, and make that spread. It was free. Now it's over, and their bond market is collapsing. Rates are going higher. Now you get a higher rate in Japan. Why do you think Warren Buffett just deployed a lot of money into Japan, where he has been sitting on $400 billion in cash? You're pulling away the piggy bank, and just as bullish as it was for asset prices, it will be equally as catastrophically bearish as all that money comes home and leaves, because the cost of the currency appreciation and the interest rates making those trades underwater, and they haven't been for 30 years. So it's, the Japanese market is changing. And by the way, people say, well, why is Japan any better than us with their 300% debt to GDP? Well, two reasons. One, they have the largest savings rate in the world. Number two, they have a massive trade surplus. Everyone buys their shit. And three, the government owns almost all of the bonds that have been sold, and they are not the world reserve currency. So you don't have to own their currency. So people look at us and say, why the hell do we own the dollar? It's $1 trillion every 100 days in debt, which is at 31,688 years ago in seconds, a trillion seconds. And the mismanagement and the fiscal irresponsibility and the questioning of our institutions, everything from elections to immigration to judicial system and all this stuff we've talked about. Why the hell would we own it? That's when I said it's too stupid to be stupid. Anyways, the bottom line is it's big. It's a big deal, because if indeed all of this money keeps going out of the U.S., sucked out of assets back home to Japan, where the $1 trillion in Japanese pension funds who have invested in our stuff and made a fortune now have to invest in their own bond market at higher rates without the currency risk. It's happening. It's going to be profoundly impactful, I believe, to the equity markets, to all the markets in North America. Yes.
We're here now. And for those people who don't understand what Andy was just talking about, the trillions of dollars every couple of months here, a lot of people say that silver is expensive. No, actually, 3 constitutional dollars are now worth 215 fake dollars. Today, that's $240.
He's one of my favorite people in the world. Yeah. He stayed at my house for a few days. We golfed, and I sold him those quarters. I bet you anything, Mineko, those are my quarters, Mineko. I love that guy. Everyone should check out Mineko.
What are the odds that I would find that on Twitter?
Yeah, he's one of the greatest guys in the world. And before he left, he lives in London, and he's a big golfer. So we went and played Trump. have a friend who belongs there. We play Die Preserve, and he's like, "Can I get a couple quarters? Can I buy some quarters?" Of course. So he made out. Well, I got to fly. I love you, JC. Everyone, God bless.
Thanks,
let's
Andy.
do this
Have
again.
a good day. We'll see you soon,
too, bro. See you, man.